So our next building panel is being moderated by Ollie Cornock. Ollie he's worked in both the private and the public sectors. Background in project finance at HSBC Group, and then went on to work with the British Ministry of Defence before joining Oxford Business Group in 2004. As appointed editor-in-chief in December 2016, and in this capacity, Oliver oversees editorial output across platforms, print and digital. Additionally, he directs OBG advisory projects and services. Personal specialisation is in developing economies and the Middle East. Familiar face and as a commentator on BBC, CNN and CNBC, to name but a few, and he's secured interviews with some of the highest profile business and political leaders in the world. So you're in good company here, guys. But watch out, could be a really challenging interviewer. So Ollie is really passionate about global trade and breaking down barriers, and something that Oxford Business Group are really also passionate about as an organisation. In terms of personal interests, it's all about global politics, sustainability, and outside of work, horses, books, and cooking. A little bit about the person as well. So, Ollie, looking forward to you chairing this. Thank you very much, and enjoy.
Thank you very much. Gosh. Well, I'm determined to. We had a lovely chat before this at the end of last week, and I realised we're in the afternoon slot. We've got 40 minutes. It therefore needs to be zippy, interesting, and covering lots of things. Is how I started it. And I finished the call completely relaxed because we could have replicated the conversation on the stage and you'd all have been fascinated. So I'm not going to do big bios. I'm going to ask the people to just introduce themselves and what they're bringing to the party. So Anusha, could we just begin with you? Could you just explain a little bit about what you do in literally a minute?
Oh, wow. Okay. Hi, everybody. My name's Anusha. I look at corporate finance and capital raising for Select, which is a Pan-African microfinance institution. We started off as just a generalist microfinance group, and over time we've dedicated our lending towards more productive use assets, so housing, incremental housing, education type loans, and more recently, given the fact that there's quite a housing deficit, we've also stepped into development, so property development as well.
Sure, I'm sure we'll be touching on housing shortly. George, perhaps turning to you.
Yeah, happy to. First of all, thanks for the invitation. It's my first in-person event again since 2019, so it's great to see people again. I represent the GSMA, and we represent mobile operators worldwide, over 750 of them, and then 400 companies in the broader mobile ecosystem. Within the GSMA, I lead the Digital Utilities Program, which supports urban resilience in low and middle income countries by enabling access to essential services through digital solutions and innovative partnerships. And our GSMA Digital Utilities Program sits within a wider GSMA Mobile for Development program, which is funded by different donors such as FCDO, the World Bank, GIZ, and the Gates Foundation. And basically the aim is to leverage digital innovation to drive different sustainable development goals. And our digital utilities team does a lot of work with urban innovators on the African continent that are aiming to address the challenges of rapid urbanization.
Love that. Wonderfully disruptive sort of stuff. Brilliant. Thomas, thank you.
Yeah, thanks, Oliver, and good afternoon, everyone. Thomas Riley is my name. I run a business called Lango Real Estate, which is a business that, together with my stakeholders, which Investec Asset Management, now 91, and Growth Point Properties, is a business that we founded back in 2018. So not too long ago, but it's grown to be one of the largest real estate asset owning entities across the continent. We have now in excess of $600 million of assets on our balance sheet across 4 countries, focused almost exclusively on commercial real estate. So we own office towers, shopping centers, and hopefully, in line with the previous discussion, some industrial assets in good time. Really in terms of focus, and I guess links into the whole city strategy today, is that we almost exclusively focused on what we term gateway cities, which are, sort of the more attractive entry points and the points of business where, the names that everyone's familiar with. So we look at acquiring assets and managing assets, optimizing assets in those cities. and not really anywhere beyond that. I'm sure we'll get into that in more detail in our discussion. But very happy to be here. Thank you.
Thank you. And Ivan.
Thank you, Oliver. Good to be here. So my name is Ivan Cornet. I have about more than 20 years of real estate experience. 10 years ago, I co-founded Latitude 5, which is an investment advisory firm focusing on Africa. What we do, we provide international and regional and local investors and operators assistance to develop their real estate activities and operations in Africa.
Brilliant. Well, there's an awful lot to cover in this, particularly when you look at our title, How to Benefit from the Rapid Urbanisation and Demographic Growth in growth rate in Africa. And that's something that we at Oxford Business Group talk about because, of course, actually it's not just Africa that's particularly acute there. Some of the challenges of a very young population, huge levels of rural-urban shift as well, huge development of some cities, and the challenges that brings. But also with that, opportunities, and I think if we've done our job correctly, we'll come up with some really interesting ideas here to bridge that. So Anusha, really starting with you, because we've got a lovely array of people bringing different things to the table today. Anusha, just on that, if I can draw you on the housing, that very human element, straight into that, where do you see the big opportunities and what are the big challenges? Because then I'm going to ask other people, so I suspect some of the challenges are going to be the same, whatever segment we're looking at.
Sure. I think, with the pandemic, there was a lot of focus on housing in terms of the pandemic forced us to work from home, stay at home, educate your kids from home. And often in Africa, the reality of working from home is actually non-existent. The infrastructure is not there. Also in terms of having proper sanitation, having access to clean running water, these are all sort of concepts that, need to be embedded going forward in terms of building cities that are sustainable. Often in my travels through the continent, I'd see developments on the outskirts where there's actually no infrastructure nodes, no accessibility to basic infrastructure like access to shops, schools, etc. Commutes could take on average 2 hours each way. And that's no way to live, really. So I think for us as a developer, a newly formed developer, these were key sort of focus areas for us. And this was further embedded by the pandemic. When we were looking at this development, we sort of said, how do we build a community? How do we actually create a city where we want to live as well? Access to good transport nodes, beautiful topography in a way. Often in Africa, apartment living is a fairly new concept. So how do we create green spaces, spaces for communities to interact with each other, playgrounds and sporting facilities as well for kids to play. Also having a retail center to service the population as well. So I think that's just been a real key focus area for us in terms of how we move things forward.
Sure. Just drawing Thomas into this, I mean, the issue, I suppose, from looking from London, from an investment point of view, is actually, as you've hit the nail, that we're starting from quite a relatively low base, and therefore the attractiveness of these opportunities with the risk, I suppose, is that the single biggest consideration?
Yeah, I mean, for us, it's about managing risk, and it's about ultimately creating a sustainable income stream for our investors. So looking with a London lens on or a New York lens on, a sophisticated investor effectively looking into Africa and saying, well, we want to apply X amount of capital into the continent. How do we know that A, it's going to be safe? We're going to get an appropriate risk-adjusted return, and that. We're investing into, Africa is such a big place, where does it go? So that was sort of the underlying premise behind our strategy, one of investing into major capital cities or the like. Lagos is not a capital, but it's big enough in the commercial sense. And, really trying to make sure that we can take advantage of, A, being at a point where we can attract blue chip international tenants. You're going to very seldom find, that whether it's a Google or a major bank or something of that sort, is going to base a head office in a secondary city. It's not going to happen. So we've sort of premised the location of our assets in nodes that are going to attract the likes of a suitable blue chip tenant, is going to give us the ability to have a far more sustainable and I guess an income stream of a high credit quality ultimately.
Yeah.
And that ultimately feeds into distributions of a reasonably sustainable nature to our tenant base. So there's also been a lot of talk and other panels and so on of development of smart cities and new cities, and the previous panel alluded to infrastructure. I mean, the infrastructure outside of these major cities, A, there's no money to build it. B, it's going to take too long. And the reality is the cities are there, so one needs to take advantage of that. One needs to position them appropriately and have platforms in the market that can, for a sophisticated investor, position the investment proposition on a basis which is compelling and has suitable governance and all those good things which I guess, to a large extent, Africa is still developing in that sense. But, this is what's needed to ultimately, I guess, try and catalyze the asset class, which is somewhat in its infancy.
Sure, and whilst it's not directly connected to the investment argument, I suppose smart cities by their very nature tend to be rather exclusive than inclusive.
Yeah, very much so. And, they tend to be, often what people are looking at is trying, and developers to a large extent are looking at creating new nodes, new smart cities outside of the city. And the reality is, that with a realistic lens on is not going to happen probably within the medium-term life frame of my business, So we're trying to look at trying to catalyze the asset class, get investors in, get that whole asset class mobilized to an extent, which, in terms of external capital from the developed world coming in, it's been sorely lacking, So there are very few instances of businesses like ours that have managed to do that, and that's unfortunate. But
Ivan, when we were speaking the other day, we were discussing sort of various models, and I'm sort of thinking that this is part of that discussion. There are myriad models. Is it easy to identify any single one that can work for an investor in terms of, I think, probably taking with residential real estate at the moment?
Just before I answer to your question, I just want to build a little bit on what Anusha and Thomas has been saying. On the change of trends, I mean, we were talking about COVID, everybody's talking about COVID. We need to understand that those trends existed before COVID. I mean, the population was there, the growth of cities, the lack of access to healthcare, to education. It was there before COVID. In COVID, we didn't discover it because of COVID. What COVID did, it's some kind of accelerator of the trends. So obviously, this acceleration among investors meant that investors looked at asset classes in a different way than they used to. Because of the whole ESG, sorry to call it trend that we're seeing for the moment, a lot of focus, I'm sorry for Thomas, has been less on shopping centers and office block, but a lot on education. Education meaning not only schools, but also PBSA, purpose-built student accommodation, has been on healthcare, has been, of course, on agriculture. And the previous panel was also talking about infrastructure and logistics. Those cities are there, so we need to...
Can we just keep the door shut, please? Very difficult to hear.
Yeah.
Thank you.
We need to bring basically food and goods in those cities, hence the development of logistics. So that's one point. The second point I wanted to, it's for Thomas, is that the smart cities, we're talking about the smart cities. There is, to my personal feeling, a bad habit in Africa to basically rebuild an area or quarter or neighborhood outside existing cities. So when the cities, we built a specific area, not maintained because there is no expertise in property management and so on. Once it's falling apart, basically we built Lagos, VI was built like this, and now it's Eco-Atlantic. And so we're basically moving the situation, which doesn't help. Of course, the cities are getting bigger, and what we're seeing is all these people coming into cities. We're talking about Lagos. There are 77 people moving into Lagos every hour. Oh. Every hour we have 77 more urban population in Lagos. So these guys are, and that's one of the issues that we're thinking of about affordable housing, is how do you basically get a roof over their head, those 77 people in Lagos. We're talking about models. Again, I've been into Africa for 10 years now, looked at many economic models for affordable housing. There's the issue on the supply side, because it's very costly. You need to buy land, you need to build. And how do you build a home on $10,000 or $15,000 and still making margin out of it? And then there is also an issue on the demand side, because of course, I mean, those people are in the informal sector, and how do we finance them? But the most important, just to answer your question, I think the most important bit is obviously knowing your market, knowing how do you answer to the population needs.
Sure. And George, bringing you on there, I mean, it's all well and good building affordable housing, but if there's no utilities supporting it, you've got a problem. And again, we were speaking, and I'd love to draw you on that, because I'm conscious of time, about different models for that, pay as you go, all of those sorts of things. Can I draw you on that?
Yeah, sure. And in a sense, housing and utility questions are deeply linked. We usually conceptualize urbanization as a great opportunity, because historically, in world history, the urbanizations of different regions has been associated with greater productivity, also a greater equality and social mobility. But the problem is African urbanization trajectories. If one can talk about African urbanization trajectories, of course we're talking about 54 countries here, but there are a couple of, I think, common trends you can identify. Is that on the African continent, urbanization isn't really associated with structural transformation, meaning with growth of manufacturing industries, which means that a lot of urban growth is actually absorbed by growing informal settlements, and that obviously poses unique challenges for utility service providers and city governments. But it also creates unique opportunities for entrepreneurs and people leveraging digital technology, because as we've kind of highlighted in one of our recent reports, Digital Solutions for the Urban Poor, while these challenges with regards to urban development and urban poverty exist, more and more Africans, particularly in urban areas, are coming online. The mobile internet penetration in urban areas in Africa is 40% higher than in rural areas. At GSMA Intelligence, we predict that 60% of Africans will have smartphones by 2025. So that opens the door for an array of new digital innovations to thrive. And if you look at some of the challenges of urban utility service provision in African countries, unreliability, unaffordability, the unplanned character of service delivery, there are a range of different digital innovations that can help respond to these challenges. You mentioned pay-as-you-go, so this is a technology that can make assets such as solar panels, but also other assets such as cooling technologies more accessible to low-income households by allowing them to make incremental payments via mobile money to then become owners of that asset. And that industry has grown quite a bit across different African countries already. If you look at the unplanned character of service delivery, more and more utility service providers are leveraging innovative data sources such as geospatial data, mobile big data to more effectively plan for service delivery. And we've also seen, when it comes to the unreliability of service delivery, quite amazing growth of the smart metering market of in the African continent. And mobile operators are key partners to utility service providers there. For instance, Safaricom has recently announced a new deal with KPLC in Kenya on smart metering in particular. So we see a lot of interesting innovations. We, as a GSMA, we've launched an innovation fund on digital urban services to support different startups that are working on challenges related to energy, water, sanitation, waste management, and then to help them also build strategic partnerships with municipalities, mobile operators, and other corporates that could add value as well. So we really believe that these innovative partnerships between corporates, startups, and governments can help overcome some of these service delivery challenges and also crowd in private investment, which is really important to respond to those.
Sure. Ivan, I was just about to ask you one, so go far away.
No, I just wanted to to continue discussion. I think what's one of the extremely interesting growth that we're seeing is PropTech, and it's not only about a better usage or maintenance or operations of building, it's also assisting governments and local authorities to be more efficient in the real estate or property management or land management. One of the biggest issues we have in Africa is lack of transparency, which is often linked to corruption. And that basically can assist can assist operators to and local population to move forward, basically.
Because on one level, as an economist, it's wonderful to have the private sector involved, but Ivan, how important is government involvement in this? I mean, and how much should the government be involved, particularly when we know the challenges, and I hate to stereotype the whole continent, but there are huge challenges with transparency.
Yeah, as an investment advisor, I would say the far away they are, the best it is. Yes. Unfortunately, it is Africa, and they are everywhere. So I think you cannot go without the government. You need, there are infrastructure departments. They're going to be involved in the discussion. So that's the whole discussion that we're having here since this morning about PPPs and the like. It is what it is. Unfortunately, there are always, there are challenges. As soon as you're dealing with the government in Africa, unfortunately, there are challenges that you're going to meet. And it's also the importance of people like people around this table to be on site, on the ground, having an understanding of the local situation, to be able to go over these challenges and to develop what's needed for their investors.
Oh, Thomas, anything on that? Sorry, jumping in from your angle, from the REIT side.
Yeah, no, I think from as a large asset owner across the continent, the government is important, So in fact, we were on a call this morning with the government in Ghana in terms of a large interchange and so on around one of our shopping malls, and so the interaction is there. It's important, but transparency is still a problem and on a number of other fronts, and it's taking some time to overcome, But I still think that there are certain countries that have made far more progress than others, and to the countries that haven't made as much progress, unfortunately, we are not putting them on our list to invest in. So that's the downside of this. So those that are far more proactive, that are open or more open in terms of transparency, are reaping the benefits. And Ghana is a clear example of that. They are a bit of a shining light on the continent, others less so.
Sorry, George.
Yeah. Just wanted to come in on the governance point. I think one of the huge opportunities associated with rapid urbanization in Africa is actually to make use of the fact that oftentimes municipalities and city governments don't often face the same political economy constraints that a national government might face, and actually can move quicker on certain innovations. And we've seen this across different African cities with strong political leadership. And I think that's one thing that I'm really excited about, is to think about identifying different cities that are actually moving ahead, creating a clear governance structure for private innovators. And I think we've seen different examples from Freetown, from Kigali, from Kampala, but also from Lagos, where city governments and regional governments that have had a different stance on certain issues than a national government have actually been able to move some partnerships ahead. And just a second point that I wanted to make, I think a key issue as well with our conversation about the urbanization challenge on the African continent is that we overlooked that 90% of urban growth from now until 2050 in African cities will actually be concentrated in secondary cities. So a lot of focus is on Lagos, Kinshasa, and so on, but who thinks about the urban futures of Mbuji Mayi in the DRC, for instance, which is a city with 2 million inhabitants, among the 30 fastest growing cities in the world, or Onitsha in Nigeria, which is similarly on that list of top 30 fastest growing cities. And I think that's one blind spot that will definitely need to be addressed as well if those urban futures are going to be inclusive and also attract private investor interest.
Yeah, I just wanted to also add, I mean, there are quite a lot of challenges, but there's also great exciting opportunities as well.
Brilliant.
Building from scratch, often is the case, and I think that's a great place to be. We definitely, a business that wants to build for the future, we want to have a sustainable business model that's around for the next 100 years. We don't believe in, low-cost developments. We had the debate about what is affordable housing, and affordable housing has such a wide range. What's affordable to you might not be affordable to me, and I think it's just providing consumers with choice. Our development that we've done now, for the first time we've got access to Wi-Fi. So, it's those sort of exciting opportunities that we see in the market.
And you mentioned the ESG sort of is on the tip of our tongues everywhere at the moment. Everywhere you look, it seems to be. But that shouldn't detract from its long-term importance. And more importantly, as I see here in London, it's important to investors. This wasn't a flash in the pan. It didn't go away with COVID either. In fact, if anything, it's underscored those values. So when we talk about inclusion now, I think that's gone from being something that's a nice sort of tick in the box to something that's actually an important thing for one's shareholders. It's an important thing to put in a portfolio. At this point, I'm conscious of time. Does anyone have any questions for the panel? Because I could keep going for ages. Any questions, anybody? Madam, yeah, if you could just say your name and your organisation as well, please.
Anusha, you were just speaking about affordable housing and about Select Africa. I was wondering what your company is doing in terms of mortgages. Are you offering home loans, or what everyone on the panel feels about the mortgage market in Africa?
Yeah, so interesting question. We started off as a microfinance institution, so we provide microloans, and it was very generalist in the beginning. And then as we started to track what the use of proceeds were, we saw that it was actually used for housing or incremental housing. And what that means is, building from scratch. As your, affordability increases over time, you take out bigger loans, and you do it in stages. You don't have a 20-year mortgage for a big ticket size loan, but rather smaller increments where you do the basic structure, then you put on the roof, then you put on additional rooms, then you put in plumbing, etc. So it's smaller bite-sized chunks. Then I mentioned that we, stepped into the real estate market of housing development. Our first foray into it is actually a rental market. So definitely we are looking at mortgages going forward, step mortgages, looking at customer affordability, looking at more innovative products and not your traditional 20-year mortgage that's relevant in more developed countries, etc. But something that will actually look at the income earning profile of our customer and sort of say, if you're renting a space for this much, how about sort of a different sort of a mortgage structure that we could look at?
And one of the issue you're having is that capital in Africa is often, for stability reason, not very patient. And therefore it is, I think it is, it's changing, by the way. It is changing with the DFIs, it's changing even with the private sector, including with regional investors who knows the market better than out of London or out of Paris. But the problem with that is that it's very difficult to ask an investor or a developer to basically build something and then sit on it for 20 years, rather than build and try to sell it so he can basically build somewhere else. So, I'd love to hear what Anusha has to say about that.
No, for sure, absolutely. It's it's always a challenge finding those patient investors, patient capital.
Yeah.
But I think it's definitely, I like the story of local pension funds, local institutions, supporting the capital market initiatives that we try and put together. So listed debt on exchanges, which are also, capital market development as well. Stimulating capital markets, creating a base where you've got investment platforms for retail investors to come on board. Yeah. Pension funds, local corporates, as well as the DFIs. It's kind of a hybrid between that as well. And then obviously you've got private individuals, so it's a mixed pool.
Yeah. Thomas, on the, do you want to draw you on the debt side of that,
Yeah.
perhaps?
Yeah, I think just, I'm no expert on residential mortgages, but from a commercial perspective, the reality is that the debt capital markets in the countries outside of South Africa are extremely small and not liquid enough. So you go and try and raise a $20 or $30 or $40 million loan for an office building even in Nigeria, or it's going to be very difficult. So the reality is you have 4 or 5 large banks, mostly out of South Africa, and one predominantly operating out of the Middle East, that are active in the market. Outside of those individual banks, there's very little access to debt funding. So the capital markets in the various countries, until going back sort of 5-6 years ago, the savings industry in Zambia was circa $200 million. So, it's a very small pool of funds that you're dealing with. And, I think, as Anusha was alluding to, going sort of the listed route and getting those sort of markets operating is critical to getting that infrastructure there to enable, capital to flow into those markets. But at this point in time, it's still a massive handbrake, so one needs the credibility, you need the governance, you need some sort of backing from local industry and the banking industry to a large extent to be able to grow a business, because without that, it's just not going to happen. So,
I'm sorry. Yes, we've been among the investors group. We've been discussing about the possibility of having the local pension funds coming into the market for too many years, let's say that. One of the beauty about the local pension funds is that they're able to invest in local currency. Biggest issue is that the investors abroad are basically asking for dollar or sterling or euros return. And if you're investing in Naira or Kwacha, it's much more difficult given where the local currency is going. And that's why always hoping that the local pension funds and insurance companies are patient and they're investing in local currency to enter this market. But to this stage, we only see some blimps here and there, but it's nothing very serious.
George, just to draw you on that in your area, does that mean, and more broadly, everyone else chip in, that things like venture capital are potentially more attractive as sources for raising money?
Yeah, I think everyone that's kind of followed the VC space in Africa this year, so it's been quite a record-breaking year for the continent in terms of funding raised, but what has to be said is a lot of this funding goes into fintech. So there are a lot of other challenges which we've talked about, energy, waste management, for instance, transport. So there's still a need to diversify some of this funding, and I think the sort of investor interest in the continent is great, but I think in some of these other sectors, investors still are a bit concerned about some of the unknowns, such as government involvement, changes of regulation, and so on. So I think in that context, clarity, regulatory clarity can obviously go a long way, but we've also seen an interesting model where digital payment trails are kind of allowing impact investors and results-based financiers to find different ways of financing these projects, because through these digital payment trails, you obviously have a lot of transparency, and if you're an impact investor in London or in Paris or in the Netherlands, you can literally see how services that you're paying for are being delivered. So that model has been quite interesting and is being applied already in the energy, water sector, but also increasingly in waste management. So I think that's quite interesting, this kind of model of smart asset financing via digital payment trails. But we're also really excited about the prospect of the VC industry in Africa to grasp these sectoral opportunities more. And I think Fintech is also a key first use case, as these digital payment trails are literally the foundation on which a lot of other innovations are also being built. So I think we'll see a lot more growth in that space.
And that innovation level inevitably makes the barrier to entry at the retail level much cheaper in the very almost immediate term, which is fascinating.
Yeah.
We have got very little time left, so I'm going to go ask you all for an opportunity that we haven't covered or you think is the most undersung and you haven't heard enough about today. Manusha.
Wow, okay. I think going forward, it's, the growth for Africa will come from African businesses. With the whole COVID pandemic, there wasn't any quantitative easing. There was no furlough schemes. It's the resilience of Africans who will build Africa, and the support of the DFIs, impact investors, and a compelling investment story. And if it is a good business model, if it's sustainable, I think that will actually attract capital and move forward.
Brilliant. Thomas.
There's no doubt that Africa remains, in our view at least, one of the last frontiers, in terms of good growth, markets that are largely untouched in many respects, especially with the developed market lens on. So I think if one looks at the urbanization and the demographic growth, that's going to present opportunities, to all the various businesses that are represented here. And, obviously speaking with a real estate focus, we're going to continue to focus on the cities. We're going to, continue to focus on those cities which are showing good growth, and pretty much all of them are. So it speaks then to cities that have good governance, where we can attract debt, to leverage our assets to an extent. And, I think, if I had to look beyond, obviously, I think Africa in many respects has been disappointing perhaps over the last 10 to 20 years. For some, but I think the opportunity is there now to build and try and catalyze the markets as we're trying to do, and we're pretty upbeat about what the next few years hold.
Good. Ivan.
Yeah, I'm just going to echo what has been said. I think there are opportunities. I mean, Africa is the land of opportunity. Then you need to implement and execute those opportunities, right? So each market has specific opportunities. It can be, as I mentioned, student accommodation in a certain country. It can be logistics in another, and within the same country, you can have different opportunities depending where you are. The most important is knowing your market and where to invest in local. What are the needs of the local population? Once you're there, I think you're good.
George.
Yeah, I think making African cities engines of productivity and social mobility is the most important development challenge the continent faces over the next 20 years. And I think, as we've highlighted in the panel, there are a lot of interesting opportunities. There are also many challenges. I think what this panel highlighted is that private sector, government, donors, and civil society, and obviously African entrepreneurs and citizens themselves need to collaborate and find new ways to shape this urban trajectory, because sort of just simply copy-pasting solutions that have worked elsewhere is not going to work, because the challenges that we're looking at are quite unique on the African continent.
I think that's a wonderful place to finish, actually, because that speaks of knowing your market. I think it's knowing the breadth of it as well and the depth of each individual market. Ladies and gentlemen, we've run out of time, but please can I ask you to put your hands together and say thank you to our panelists.
Thank you.